Hey everyone, Xavier here with Restora Funding, and today we're going to be talking about what is a thick credit profile. We're going to be talking about why you should have a thick credit report and how you can get one. So this is going to be mini course 9 in our series of mini courses, and let's just jump right in. So we're going to start with what is a thick credit profile. And I'll start with this. When I define a strong credit report, I basically think of one that displays a high number of on-time payments. Okay. So you want to show lenders that you're capable of managing debt and paying back that debt in a timely and agreed upon manner. And there's two ways to show that you can have a high number of on-time payments. The first is by having a long credit history, right? So if you have one credit card, but it's 7 years old, well, in that 7 years, if you're making monthly payments, that's a lot of on-time payments you've made, right? So that's one way to do it. Now, the other way to do it is by having a lot of accounts. So you could have 5 credit cards over the course of 7 years, and then you've made 5 times as many on-time payments versus the person who had only one credit card. So you actually then would be a more trustworthy borrower versus the person with only one. Okay, so this is the power of having a thick credit report. Essentially, it means that you have a lot of open accounts. So what are open accounts? Well, an open account can be like the example I just mentioned, a personal credit card. It could be a mortgage. It could be a student loan, an auto loan, really anything, personal lines of credit, really anything that reports to your personal credit report. Okay, so having more open accounts, it's going to showcase diversity, right? It shows lenders, hey, I can wield debt at a high level and I can actually pay that debt off consistently. So the more open accounts you have, just as kind of a general rule of thumb, the better. Now, I'm not saying go open like 5 credit cards today. You don't want to do that, but it's really about just gradually opening more accounts, maybe having a few personal credit cards, a few auto loans, a mortgage, maybe a couple student loans, keep it cool, but definitely don't be afraid to borrow. Okay. So having a thick credit report is all about having more open accounts and showing lenders that you know how to borrow and that you know how to pay back. Okay. Why do you want a thick credit report? Very simple. So lenders want to know that you can manage money responsibly, especially at a high level. So the more accounts historically that you've been able to show that you can pay down, the more financial responsibility you showcase, right? So think of the example I gave earlier. If you were an investor and someone wanted to borrow money from you and they only had one credit card and like that was it, it's not a lot of data for you to work with to show that this person can manage money responsibly, especially if their credit card only has like a $1,000 limit, but they're asking for 100K. It's like, well, why should you trust that person with $100,000? Whereas someone with a thick credit report, let's use the same example, you're lending $100,000, and you see someone who has 5 personal credit cards. They're all $20,000 a pop. You see that they use them, they pay them off. They also have 3 mortgages and they have an auto loan and maybe like 5 student loans that are like 5 years old, right? You're probably going to trust the second person more because that person, as long as they've made on-time payments over a long period of time, is showing, hey, look at all this debt that I'm able to wield and that I'm able to pay back, right? It shows you as the lender that this person can borrow money and can actually manage it really well. So that's the kind of person that you want to invest in. And I would encourage you to be that kind of person for the banks. Okay. So you got to think about it this way. The banks are just investors. If you were lending money, who would you want to lend it to? Figure that out and be that person. And having a thick credit report is one of the key ways to do this. And that's why I'm making this video. It's very important. So it's going to make you look more attractive when applying for any type of credit or loan product. This could be credit cards. This could be like personal credit cards, business credit cards. This could be mortgages, refinances. A lot of real estate investors in this community, right? Home equity lines of credit. This could be auto loans and more. So not only are you going to be able to expect a greater likelihood of approval, but you should also expect higher limit approvals as well as more competitive interest rates. Okay. And this all stems from you just being a more trustworthy borrower. The banks, they're gonna give you better interest rates. They want to lend to you. They're gonna give you higher approvals. They trust you more with managing a high amount of debt. So simple logic here, everybody. But overall and in general, you just want to be able to showcase diversity and financial responsibility to accrue more trust with lenders. All right, now this is the good stuff. How can you get a thick credit profile? Okay. Number one, don't be afraid to borrow. America lives on debt, right? The whole country's in trillions of dollars of debt if that's not proof enough. So borrowing money is the foundation of the American economy. By borrowing money and paying it back, you're strengthening trust in others who want to lend to you. Just like the examples I gave before, be the person that you would want to lend to. Okay. So don't be afraid to borrow. There's good debt and there's bad debt. Don't get yourself in high interest credit card debt if you can avoid it. Do get yourself in debt that is going to either one, return a profit for you, or accumulate some kind of equity, which is almost synonymous. Or two, maybe you have only one credit card, but you want to go apply it like Chase and Amex, get a couple more credit cards under your belt. And so maybe it's not for the intention of like making a profit off those credit cards, but just to make your credit report look a little bit sexier, right? That's the other reason why you would want to borrow money. So don't be afraid of debt. Debt can be a tool that can be used to profit or develop financial liberation, right? And it also is going to make you look a lot better so that when you want to borrow money in the future, you're able to do that without a hassle. Now, by strengthening your ability to borrow, you can invest at a higher level. Okay. So you're going to make profits from other people's money via 0% interest business credit. And that's what our company here at Restora Funding does, right? We can get you literally free money from the banks that you can use to turn, for the highest profit margins. And the way you're going to be able to do that is by having a thick credit report. Okay. That's how you're going to be able to do it the best of your ability, at least. That's how you're going to get high limits. And that's how you're going to get better approval odds. Have at least 3 personal credit cards. A credit card is considered a revolving account. If you don't know what a revolving account is, go back and watch mini course 1 and 2, where we talk about MyScoreIQ and leveraging personal credit and how to read your personal credit report, because we want to know the difference between a revolving account and an individual account, right? A revolving account is everlasting. A credit card, you swipe it, your monthly payment comes up, you pay it off, and that card is replenished. Once it's replenished, you can spend the money again. And that's the key. Okay. So you want revolving accounts because number one, they stay on your account, your credit report forever, versus a loan that has maybe a 36-month or a 3-year payback term. Once you pay off that loan's going to close out and then it's not on your credit report anymore. You want revolving accounts because they stay on your credit report forever, which keeps your profile thick and it builds good credit age. Okay. I love loans as well. Okay, so personal loans, auto loans, student loans, anything with a term. Once you close that out, the lenders can still see that you had it and that it, closed out and you paid it successfully. So it's still a good thing. Don't be shy of those, okay? Having multiple credit cards also adds diversity, credit mix, and you're going to have more of a variety of banking relationships so that when you go for business funding or want to work with other financial institutions, you have options, right? And you're a partner with multiple banks now. So a lot of benefits to having multiple credit cards. I would recommend having at least 3. And finally, actually, before I move on, request credit limit increases. Okay. So call the number on the back of your credit cards every like 90 days or so. Make sure they're not going to hard pull your credit and go ahead and tell them something like, hey, I need to increase my credit limit from 3,000 to 10,000 because I'm going on a trip, or I want to spend more on the card to keep up with the new income that I'm getting from my job, right? Give them a reason to give you the credit limit increases. And this is what we call mirroring or comparable credit, meaning other lenders will actually match what you have currently on your credit report. If you have high limits, you can get high limits elsewhere. So added benefit here. And finally, borrow money in the form of auto loans, mortgages, student loans, and personal loans. Okay. Have diversity. Don't just have a bunch of credit cards. Get a mortgage. Don't be afraid to finance that vehicle you're getting, right? As for me, I have like 5 student loans. They're all like 10 years old from back when I was in college, right? I don't pay them off. And the reason is because they keep my credit report thick and they add age. Okay. So I like my student loans. And a lot of people don't know that. Also, don't be afraid of personal loans. Personal loans are excellent for building a thick credit report. Okay. So a lot of people are really afraid of like student loans and personal loans. In terms of actually having strong credit, they can be pretty beneficial. All right. So don't go crazy. Don't open up like 10 loan products at once or 10 credit cards at once. Just maybe one every 6 months or so is fine, and gradually build up to having a stronger and healthier credit report. Okay. And finally, if you have watched this video and you feel like you already have a pretty thick credit report, or maybe you're just not sure and you want us to give you a double check, go ahead and just email us at service@restorafunding.com, and we can take a look at your credit report. And we can also talk about getting you funded 50 to $150,000 in the next 30 days in completely 0% interest business credit. Okay. So Sophia and I will have a conversation with you. We'll look at things. We'll help you qualify for what the banks are looking for. And from there, we'll just go ahead and jam out that funding for you so that you can use 0% interest business credit to start and scale your real estate ventures. Okay. That's all I got for today. So this is mini course 9. What is a thick credit report? Why do you want to have it, and how to get one? Stay tuned for the next videos. Okay. Thanks for watching. Bye.